Good morning, everyone. Welcome to Thai Union's Analyst meeting for the fiscal year of 2025 results announcement. My name is Walanya Lijatulong, and I will be your MC today. First of all, I would like to introduce our management. First, Kun Thirapong Jansili, President and CEO. Kun Ludovic Garnier, our Group CFO. And Kun Pinyada Sangsakdahan, Head of Investor Relations. Today's session will take around 1.5 hours, including Q&A session, and then followed by a 10-minute break before we begin the TFM Analyst meeting. Without further ado, I would like to invite Kun Thirapong to begin the presentation.
Good morning to all of the analysts and the executives from financial institutions joining us today. Today we're going to share our performance results with you for the fourth quarter of last year as well as for the full year of 2025. 2025 was a year that is very memorable for us because we have so many stories, important stories, whether it's in terms of the reciprocal tariffs, which was something quite new for us, and also the exchange rate for the Thai baht, which has strengthened. The appreciation of the Thai baht is one issue, but what is important is that our neighbors, their currencies have weakened, and this is a challenge. This was a challenge that we faced in the past year. Nonetheless, I believe that thanks to our adjustments, and which we have continued to adjust. We've been continuously adjusting. Over the past 2 years, we have put in place our SONAR program, our transformation initiatives, our Tailwind program, or iTail, to improve our pet care profitability. And this has helped us achieve or be able to manage our costs in terms of production and SG&A as well in the past year. Thus, in the past year, we have prepared for growth in 2026. If we take a look at our transformation program, you will see that we have our SONAR program, where the goal is to achieve savings at $25 million, and our Tailwind project, where we want to have an operating profit uplift of $20 million. And these two projects, we are on track. In terms of cost resetting, we have a target to reduce our cost by $118 million by the year 2027. And in the past year, we had refinancing with 24 billion Thai baht, and this led to a decrease in our interest expenses significantly. And we also have our portfolio focus, where we have adjusted our portfolio to emphasize on higher profit margin products. Innovation is also extremely important for us. Every business unit of ours, we have launched new products, whether it's our ambient branded in America and in Europe. In the pipeline, the products in our pipeline, that we're seeing significant achievement in that area. We have our innovation hub in the Netherlands. In the pet care business, innovation is also extremely important as a key driver for the sales growth for iTail. In our frozen business and the culinary ready meals, this is something that we have seen major development in the past year. If we take a look at the full year results, you can see that in terms of Thai baht, the sales went down by 4.1%. But what is positive is that our volume has returned to growth at 2.5%. The overall volume that we have produced and exported is at 900,000 tons, and the demand is very positive for frozen feed and pet care products. And for the feed, this is another business of ours where we have achieved a new record high in terms of market share and sales and profitability. And later on, Thai Union Feedmill will present their performance results for you. And we also have pet care positive results. So we've done very well in the past year in that regard. Our gross profit margin is at in a high level, although it is below our target. It's at 19%. The drop is because of the foreign exchange impact. Another issue that I believe is something that is a highlight for us is, despite our net income decreasing year on year, our earnings per share, or EPS, has grown comparing year on year. It's gone up 7.2%. And this has enabled us to pay dividends, higher dividends. And on the next page, you can see that our EPS has grown from 1.8 to 1.16, from 1.08 Thai baht to 1.16 Thai baht, and our adjusted net profit has gone down by 3.1% despite that. And this is something that we are very happy with. We are able to provide that earnings to our shareholders, and it continues to remain at a constant rate, a more or less constant rate. And on the next page, you can see that our sales is at 35 billion Thai baht. The advantages here are, if we do not include the foreign exchange impact, our sales have gone up 0.7%, which is a strong momentum in the fourth quarter. Our gross profit is at 18.3%. This is mostly due to the tariffs, the increasing tariffs, as well as the higher salmon prices in the fourth quarter in Europe. Our adjusted net profit is at adjusted operating profit is 1.65 billion Thai baht. Operating profit margin is 4.7%, and our adjusted net profit has gone down 22.7% in the fourth quarter. And on the next page, we'd like to point out our track record in terms of consistent dividend payouts. Ever since we founded the company, we have been able to provide dividends, and our policy has been no less than 50%. And we have paid at this high level ever since the founding of the company. From 2023 onwards, 2024, you can see that we have continued to pay out higher and higher dividends. And in 2024, which is 0.66, and in 2025, it's 0.7. And in this year, we have already paid 0.35 per share, and in the second half of the year, we will pay 0.35 baht per share as well. The ex-dividend date is on the 2nd of March, and the record date is on the 4th of March, and the payment date is on the 24th of April. And that's all of the details regarding dividends. And the reason for our higher EPS is our share repurchase program, which today we have repurchased about 10%. Most recently, at the beginning, on the 8th of January, we lowered our shares by 200 million shares. We have 400 million shares remaining. That is our last program. And we will be implementing that plan in the future. And here you can see, as always, we continue to be awarded and receive recognition from various organizations. And we received the Leadership Award from the Thai government and also from the Stock Exchange of Thailand. And also our products have been recognized, whether it's EcoTwist that we launched in the UK. We received an award. It's a packaging award in the last year that we are proud of. And another recent news that we're very proud of is our sustainability recognition. We have received ranking in the top 1% globally by S&P Global. We're included in the S&P Global Sustainability Yearbook for 2026. And this is something that we continue to be a pioneer and leader in. We have been upgraded in terms of our ESG ratings, whether it's by FTSE, Russell ESG, from the climate disclosure, we have been upgraded from B to A. And from SET, the Stock Exchange of Thailand, our rating has improved to AA in agro and food. And there are other awards and recognitions that you can see from the presentation. And as for the financial performance for the fourth quarter in 2025, I would like to hand things over to Ludo to share those details with you.
Thank you, Kuntirapong. Good morning, everyone. Very happy to be with you. I will start with our usual 5 years picture on the sales and the GP margin. The few takeaways for you are we are extremely proud this year to achieve our best performance ever in terms of GP margin for the whole year. Just below 19%, we're expecting to reach 19%. We are just below for the whole year. And you can see achieving this performance in such a volatile environment with the US tariff and the FX playing against us, I think we can be very happy about that. Of course, we don't want to deny that over the past 2 quarters, we have been under pressure because of the US tariff. You can clearly see that in our numbers. However, the full year performance is very encouraging, and I think this is something we have to acknowledge. The second one is please have a look at the sales development quarter after quarter. For you to remember, we started Q1 with a decrease by 10%, mostly because of the FX. And then in Q2, minus 5%, Q3, minus 1%, and almost stable in Q4. We are very close to be flat or even back to growth. But I think all of these are very encouraging KPI that we are looking for. If I deep dive on the FX impact, and you know the FX has been a very strong impact for us, you can see here we have a small table. In Q4 alone, the USD versus Thai baht has been deteriorating by 5%. The same for the GBP by 2%. Euro has been the opposite way by 3%, so it's partially offsetting this impact. So we are facing, even Q4, some very strong FX impact compared to last year. And this is something we have to keep in mind, even if we do a lot of hedging. Of course, we have our US operations, which are affected by this one. And Kuntirapong mentioned this one. One of the issues is all our competitors in the countries around Thailand have not seen such an increase of their own local currency. Okay, so we are one of the only one where the local currency has been strengthening so much versus USD over the year. So here a few things. What is important for me is the dark blue. Okay, the dark blue is the organic growth. You can see now it's 2 quarters where the organic growth is positive. I think this is encouraging. If you look at the light blue also, this is the FX impact. And the good news is the FX impact is reducing quarter after quarter. Okay, you can see here in Q1, it was significant. Q2 also, Q3 dropping a bit, and then Q4 now, it's almost nothing, but it's offsetting our organic growth in Q4. One good takeaway also from this slide is our volume growth. Okay, we told you when we've been facing with the US tariff in Q2, we have been facing one of the key question marks will be the reaction on the demand in the US. You can see here we have been generating some volume growth consistently every quarter. every quarter. Of course, we have different pictures depending on the category, and Kun Kwan will elaborate on this one, but I think this is also a very encouraging signal for all of us. Next slide, you can see our raw material prices. I think overall it has been under control. This year we have been facing a bit of inflation. You can see in Q4 we had 1,573 for the skipjack, increasing a bit compared to last year, but overall within our comfort zone of $1,400 to $1,700. Shrimps also has been increasing overall quarter on quarter, but still an acceptable range. And the salmon also, I think, is also more steady compared to where it had been the years before. So I think we have been quite happy with the salmon development. You have also, for each of these raw materials, our assumption in terms of budget for the year 26. Of course, what we provide is always the average for the whole year. You can have some ups and downs during the year, depending on the quarters. But overall, we don't plan for very significant changes in terms of raw materials next year. In tuna, the same in salmon, the same in shrimps. Okay, we do expect a bit of inflation, but nothing dramatic for the business. So next one is regarding the FX, and I think this is the most important slide that we do have. Of course, the deterioration of the USD versus Thai baht. I mentioned this one has been impacting our business. You can see in Q4 we are 32.2. In Q1 it's deteriorating a bit further on this one. This is one of the key components of the performance, and it was quite far away from our budget assumptions for the year 25, which was much higher than this level. Euro, there was some ups and downs. Euro has been increasing over the past 2 quarters. So I think we're in a better shape here. GBP also has been deteriorating versus Thai baht. In Japanese yen, I don't need to comment. We know it's very weak versus all currencies. If I now move to our net debt bridge, 24-25, the first thing is our net debt has been increasing in 25 from 53 billion baht at the end of 24 to 61 billion baht. Okay. Let me walk you through the key component of this one. First of all, the EBITDA. I think the EBITDA is quite aligned with our expectation. 12-13 billion baht. This is where we are usually. But then next to the EBITDA, you can see we have a big box, which is net working capital, increasing by 6 billion. That was kind of a surprise for us, especially in Q4. Our inventories, our AR have been increasing in Q4. Few drivers for that. First of all, the US tariff now are inflating our inventories in the US on average by 20-25%. You know, in the US, we import a lot of product coming from Thailand, from Indonesia, but also from India. The average tariff rate that we have is something close between 20-25%, depending on the mixed country. So this is one of the reasons. We have been facing also some good issues, a lot of orders in our US frozen business at the end of the year. So we build up a lot of inventories at the end of the year to face with this situation. Also, our sales in December were high, so our AR are also higher compared to what we have usually. Okay, so the impact of all of this one is 6 billion baht over the full year. Capex are under control. For you to remember, at the beginning of the year, the guidance for 25 was 4.5 to 5 billion baht. When we have been facing with the tariff, we have been reducing our guidance. We say we want to keep under control, and then after we have been loosening a bit the capex, okay? But still, we have been spending below our guidance for the full year, and you will see when Kontrapong will talk about our guidance 26 for the capex, we are catching up a bit of capex which have been delayed from 25 to the year 26. All the rest, tax, dividend, is kind of normal. You can see, of course, on the right, we have also one box which is very unusual, which is our treasury share buyback for 4.3 billion baht, which is the last program we've been doing in the year 25. So the consequence is our net debt to equity has been increasing. It was below 1 at the end of 24. It's 118 at the end of 2025. There is one good news. The cost of debt has been decreasing. Okay, it was 3.65 last year. In 25, it was 3.31. Here you can see the impact of the interest rate gradually reducing in the world. We have a clear action plan for 26. We are not happy with our cash performance in the year 25, so we have a clear action plan to improve and to generate more cash in 26, and especially to reduce our net working capital across all our locations. Okay, I think we can understand 25 with the tariff, we had to build up a lot of inventories, but now the tariff are becoming part of the routine. We have also some good news. You heard that India, the tariff for India, are reducing from 50% to 19%. We do have a lot of inventories in the US coming from India, so that will help us to decrease also our level of inventories next year. So you can see here the impact in terms of ratio, the inventory days. You can see here clearly the inventories in terms of absolute amount have been increasing by 4 billion baht. In terms of inventory days, we have been gaining 3 days, and the same roughly for net working capital. Okay, in terms of ratio, net debt to EBITDA, we are exceeding 5 times. Okay, we are not happy with that, and again, I mentioned to you that we have an action plan. The goal for us would be to reduce our net debt and our net working capital during the year 26. We want to get back very close to 1.1, okay, by the end of 2026. And also in terms of net debt to EBITDA, right now we are at 5. We want to go more in the territories of 4.4 times at the end of 2026. Very strong actions are expected next year on that part. Now I move to the transformation program. You know about Sonar, you know about Tailwind. You know this is the end of the Sonar program. We told you it was a 2 years program, 24-25. I think we are on track. We are slightly exceeding our target in terms of savings for the year 25. We did achieve $20 million versus a target of $15 million. For you to remember, next year we are planning to have even more savings because we will have the full year annualized savings coming from this one. We did give you here some few initiatives we have been doing in Sonar. Okay, one of the most important one for us was to move to one global non-fish procurement organization. Okay, for you to remember, before our procurement organization was very fragmented by regions or even by companies or even by factories. Here we moved to one global one, and we have been consolidating a lot of our purchase. Okay, especially in terms of feeds, in terms of olive oil. Now we are doing some purchases for the whole group. And of course, our bargaining power is much stronger. So we had some very interesting savings coming from that. You can see especially the impact in our feed business. Okay, please stay for the TFM analyst meeting right after this meeting. There are a lot of good and exciting news to share with you. But you can see their performance has been really improving in 25. And clearly, Sonar is one component of that. For you to remember, our feed business, the lead time is very short. Okay, we have all our operations in Thailand. We are selling in Thailand. So you see directly the impact in our P&L. This is different for our ambient and frozen product, where our factories are quite far away from our market. So we have very often 6 months lead time between the production, the transportation to the market, and then the sale to our customers. You have also a few examples of initiatives we have been doing in terms of production. We have been shifting some SKU across the factories from the US to Africa. It's the first time that we have our factories in Africa producing for the US. So we are becoming more agile. Okay, and of course we did all of this when we were facing the risk of 38%. Now that we're at 19%, of course we don't need to do dramatic changes in our supply chain. However, I do believe that we became much more agile this year. Okay, our factories in Africa, especially at PFC in Ghana, they can source for the US. So for us, it's one more interesting sourcing. We want to stay ready. Of course, the tariff situation is extremely volatile. Every morning we are watching the news about what did they say in the US. There could be some positive news also, but we are careful also on that. Tailwind, Tailwind is a 3 years program. So there is one more year in 2026. Again, I think in terms of pure savings, we are on track. We slightly over-deliver compared to our expectations. For you to remember, there is 3 work streams in this one: the commercial, the operation, and the procurement. Also in this one, we are happy about the results. Okay, of course, for you to remember, we told you in 24, the combination of the two programs will be a net negative. Okay, the costs were higher than the savings in 24. In 25, we told you it's kind of a wash. We have kind of the same amount between the cost and the savings. 26, we would expect a different situation because, of course, the cost related to Sonar will almost disappear. But then all the savings will be here. So it will turn to be positive in 26, but we will still have some cost on the Tailwind program. And then 27, we don't have anymore all these transformation costs. And then we expect that we will here maximize the profit on this one. Of course, all these savings are partially being offset by the inflation. Okay, so you don't expect to see this saving directly floating in our bottom line. We have some inflation, the tariff also here. So you can see directly the $20 million in our bottom line. But overall, I think we are moving in the right direction. We told you also since last quarter that we did launch the cost reset program. And in fact, the cost reset is just a transition from Sonar, which was a very specific 2 years window, to a continuous improvement. Okay, cost reset is some initiatives we have been launching on the COGS and on the SG&A. We started in the middle of the year to face with the US tariff, and the idea is also to continue to slash our cost and to reduce our conversion cost and our cost in the factories. We put here some few initiatives. Again, the cost reset is applicable across all our categories. Within the business, the target for 26 is around $60 million. There is a part which is duplicated with Tailwind. Okay, so we have $15 million, which is also in Tailwind. So if you want to focus only on the cost reset, it's more in the range of $45 million. Again, that will help us to face with the inflation, to face with the impact of the US tariff. I think we have a lot of good initiatives going on right now through this one. This program, very clearly, we are capitalizing on Sonar. Okay, I think through Sonar, we have been learning a methodology which is now applicable for the whole group, and we just want to transition now to a continuous improvement. We don't have anymore the support from the consulting firm. We do it by ourselves, but we take it very, very seriously. And clearly, this is one of the key initiatives that the GLT is following within the group. I wanted to share also with you just one slide on the impact of tariff. So you can see here, of course, all our operations in the US are being impacted by the tariff. Also, our operations in Thailand are also impacted because we do export a lot in the US. Pricing, we told you from the beginning, the strategy for us is to transfer the impact of the tariff to our customers and to the consumers. So far, we can see we could not do it across all our category. Okay? Why? Because we have to watch out what our competitors are doing. We are not the only one, of course, in this market. Depending on the competitors, depending on the category, we are facing different situations. We are also monitoring what is happening in the other proteins. Okay, so here we cannot say the tariff go up by 20%. We just increase our prices by 20%. That would be too easy. Okay, so we do some gradual increase. We did a bit in 25. We'll continue to do more in 26, but it will be gradual. Okay, quarter after quarter, we increase the prices to finally, at the end of the day, push everything to the consumers. One thing also you need to have in mind, and maybe it's not clear for everyone, the vast majority of our business in the US is FOB. Okay, meaning the buyer will take care of all the tariff impact. There is one exception, which is in our frozen Thailand business. Okay, in our frozen Thailand business, we are DDP. Okay, meaning we take care of the tariff, basically. Okay, so the impact for us, it will trigger an increase of our SG&A because of the tariff impact, and of course we increase our prices, so our sales will increase. Okay, so you will see that our GP margin is being inflated by the tariff impact in our frozen business. That's why Khun Kwan will comment after a record high GP margin for our frozen business, but our SG&A are also increasing coming from that. Okay, so it's almost a wash in our OP margin, but you have a bit of inflation for these two. And of course, in the ambient, in the pet care, as long as we are not able to transfer all the impact of the tariff to the customers, our GP margin is a bit under pressure. We have been trying to estimate, it's just an estimate, the negative impact on our OP for the full year 25. We estimate it's around 350 million baht. Okay, it's not a small amount. For you to remember, it's mostly Q4 and Q3. There was nothing before that time. But it's a hit for us of around 350 million baht. Again, it's an estimate. It's very complex to have a detailed calculation. But it provides a good overview, I think, about where we are. One more thing also, and I think maybe we were not vocal enough during the year. We told you since the past 5 years that we have been very active now in our portfolio management. And we continue to do that in 25. And here I just wanted to give you an overview about a few divestments we have been doing in 25. We did not really talk about this one because the impact are very small. These were small businesses, and very often we sell very close to net book value, so you don't have any large gain or loss in our P&L. But we sold our shares in our factory we have in PNG, in Papua New Guinea. We sold our shares also in our supplement business in Q3, and the same for a small joint venture we were having in Thailand together with Interpharma. And finally, you heard the feed business saying that they sold their factory in Pakistan. These are small things, but we told you from the past few years that now we are clearly addressing all the loss-making businesses. Okay, there was one common point to all these businesses: they were all loss-making. Okay, so clearly we are fixing them. We have less and less loss-making businesses within the group. I think it's a good thing. It's a good sign. We still have few of them to be focused on, and we are working very actively on this one. But I think it's a good. It also avoids some distraction. Okay, even if sometimes these businesses are very small, it always creates some distractions of business, and we want to focus on what is having some impact. Finally, the last part for me, we just wanted to give you a heads up regarding the top-up tax. You know, it was triggering a lot of questions from your side all along the year. We told you last time the impact would be between 100 and 150 million baht. Finally, it's 91 million baht for the whole year. For you to remember, the impact for us is only in Thailand. Okay, in Thailand, we have an effective tax rate which is close to 10.5%. So we have to bridge the 15%. So we have a top-up tax which is between 4 to 5%. And this is 91 million baht that you can see here. However, you can see that for 26, we expect the impact to be higher. And here we expect the top-up ETR impact to be around 1 to 2%, and the amount to be, again, back in the range of 100 and 150. Okay? For you to remember, we are still waiting for some compensation from the Thai authorities. We know they are working on that. It takes time. At that stage, we have no visibility about when they will release anything, but we do expect at one stage they will get back with some compensation measures, especially for the exporters business like we are. And now I will give the head to Khun Kwan to go through the business performance.
Hello, everyone. For our business performance, as always, we're looking at it by category. In 2025, the company had sales of about 132.7 billion Thai baht. This is mostly impacted by foreign exchange. And if we take a look in specific areas, just our sales volume, as Mr. Thiraphong told you earlier, we have a sales volume that has increased by 2.5%. And in the graph on the bottom of the slide, you can see our sales volume. They are driven by our frozen and pet care categories. In our gross profit margin numbers, this year we have a record high gross profit margin at 19.8%. And in every category, we have the gross profit margin numbers that are in line with our guidance that we provided earlier. Let's begin with a look at the fourth quarter in the ambient category. Our sales is at 15.67 billion Thai baht, going down to around 2% year on year. And this is mostly due to the negative FX impact that led to lowered average selling prices. However, if we take a look at the bottom left, you can see the sales volume in the fourth quarter for the ambient category increased by 1.7% year on year. This is mostly because of increasing demand in Europe and the Americas and in Thailand. In terms of gross profit margin, it's at 18.4%, going down by 2.2% year on year. The primary reason for the decline is the U.S. tariffs, which have led to increasing costs for us, while the prices, our selling prices, were not adjusted to cover those costs. And we were also impacted by the raw material prices for tuna, which increased by about 3% year on year. We have plans in place to deal with this risk because we have increased our prices for products in America and the American continent since the third quarter of last year. And in January of 2026, we also increased product prices to mitigate that risk that has led to a lowering margin. And for the full year for ambient, our sales have gone down 6% year-on-year, and this is mainly due to the FX impact. The sales volume also went down by about 2% year-on-year. In 2025, the company, our customers in the US were waiting to see the situation regarding US tariffs. Taking a look at our gross profit margin, you can see that our gross profit margin was able to achieve a level of 19.8%, and this is very close to our target range that we provided in our guidance of 20 to 22%. In the fourth quarter for the frozen business, our sales was at about 12 billion baht, increasing 3.4% year-on-year, and this is due to sales volume increasing by 5.6%. Our sales volume that has increased is from the feed business for the most part, and Thai Union Feedmill will be providing more information on their business operations that have led to an all-time high. And the sales volume for the US, you can see that it is still soft due to the US tariff impact. Nonetheless, we have a gross profit margin for frozen business that is the best ever. It's an all-time high, quarterly high at 14.5%, and this is thanks to our increasing selling prices in the US, and the costs were relatively stable. As our executive shared with you, the frozen Thailand exports to the US, we have increasing SG&As because of the Incoterms or the logistics terms, which are delivery duty paid or DDP, where we have to absorb those freight costs. Our margins, however, continue to expand, and our feed business has provided support in this regard. For the full year, in the past 5 years, we have had lowering sales, but we have plans to remove the low-margin businesses, as well as those companies that are not generating any profit. We informed you last year that our new baseline for the frozen business will be at around 42 billion baht, and this year we have a drop by about 2.5% due to the FX impact. Our sales volume for the frozen business for the entire year increased by 7.6% year-on-year, and this is mostly due to the volume from the feed business, which increased. And our gross profit margin has also improved to an all-time high of 13.2%. As for our pet care business, you can see that in the fourth quarter, we have sales at about 4.69 billion Thai baht, increasing 1.4% year-on-year. If we take a look at the sales volume, it increased by 2.8% year-on-year. And the lowering sales, opposed to the increasing volume, is a result of the FX impact as well. In US dollar terms alone, our sales have increased by 6.7% year-on-year, and this is due to improving volume and the market in the US and in Europe. And the gross profit margin for the pet care business is at 26.3%, and this is we have exceeded the range that was provided 3 quarters in a row, and this is a reflection of strong operations. The pet care results for the full year, our sales went up 2.8% year-on-year, driven by the increasing sales volume. If we take a look at this in USD terms, pet care increased by 9.2%, while the gross profit margin continued to be in line in the target range of 23 to 25%. And lastly, as for the sales for value added, you can see in the fourth quarter, the sales dropped by 9.2%. And this is mostly a result of demand in the US market. Under the value added category, the various products, there's a big mix which include ambient and frozen value added products, as well as packaging, ingredients, byproducts, and also other products. When our sales decreased, it was mostly due to the value added and frozen sales, which reflected lowering demand in the US. Our gross profit margin for value added went down to 21.8%. And the full year performance for the value added business went down by 9.5% year-on-year. It went down in every category, as I explained earlier, but the ingredient business has done quite well, and the gross profit margin for the value added is also favorable at 25.4% for gross profit margin. This is higher than our market range. It's above the target guidance of 25%. I'd like to return the presentation to Mr. Tirapong now. In 2025, we have reset our baseline, and it was a year for us where our sales went down, but in 2026, we expect to see growth, a return to growth, and we have set a target for sales at 3 to 4%, and we expect growth in every category, especially high growth in the pet care for ITL and also our feed business from TFM. The sales growth will be mainly driven by higher volumes, not just the prices. And our assumption that we're using in 2026, the FX rate is at 32.5 Thai baht per US dollar. This is based on the financial institutions, and we have not adjusted this number any further so far. Our gross profit margin, the guidance, we are committed to improving the gross profit margin to a level of about 20%. Our guidance is 19 to 20% for this year, and we expect that the margin will increase in the ambient and frozen and pet care and also value-added categories. SG&A is at 13.5 to 14.5%. I feel that this is an appropriate level because we are combined our branded businesses. We've included our branded businesses, and we have our lower transformation costs. We will not have any transformation costs from the Sono project. CapEx is at 5.5 to 6 billion Thai baht. This is primarily due to the increase is primarily due to our projects that continue on from last year. We had a lower CapEx for last year, lower than our target. In addition, we are investing in other areas, such as the Feedmill in Ecuador, which we will be recognizing CapEx numbers this year. We have an automated warehouse for pet care as well, which has been completed, and we will see CapEx numbers regarding that as well. We have a new facility for packaging, whether it's cans Asia Pacific Can, that's one of the businesses, and also our printed materials, graphics, where we continue to invest. Our dividend policy remains at least 50% twice a year. And that is the guidance for 2026. Thank you.
Thank you very much to our management for the presentation. Now we would like to open the floor for Q&A. As usual, we will prioritize the question from the hall. You may raise your hand and our team will get to you. For the online participants, you can submit the question in the Q&A chat box.
If anyone here in the hall has questions, please raise your hand and we will present a microphone to you. I'd like to ask about the tariffs. There will be. What are your thoughts on the positive, negative effects of the tariffs? We don't see any change. We don't expect any lowering of the tariffs. I believe that President Trump will not give in. We continue with the same idea concerning the tariffs. I have a couple of questions for you. Could you share about in the first quarter, what is the demand situation in the US? How is that as well? And your ambient category, it seems like it's a bit weary.
I think, of course, we are just at the beginning of the quarter. The situation we see in the US, we see still some good demand overall. Okay, you remember that we did some price increase already in Q4. We don't cover yet the impact from the tariff, and that's why you can see now Q4 GP margin has been deteriorating a bit. We're doing some further price increase in Q1, so we do expect gradually the GP margin of the ambient business to improve. I think the one thing which is positive is there is no strong impact on the volume so far. Okay, of course we keep watching. As I mentioned a bit earlier, we are monitoring what our competitors are doing and also what is happening on the other protein. Okay, we're not the only one in this market, but so far we don't see any significant change compared to what we have seen the previous quarters.
Okay, so can you elaborate more on gross margin trend in 2026? Because the ambient has been doing quite well in terms of the gross margin, but however, we started to see tuna price, moving up and also pressure from the tariff as well.
Sure. I think you have seen in the guidance announced by Kuntirapong, for the whole year, we are planning between 19 to 20% for the whole group. So we are planning for all our GP margin to improve across all our categories, including the ambient. However, we do expect that it will be gradual all along the year. I would expect in Q1 it will be a bit softer, and then after it will continue to increase and to recover further quarter after quarter.
In 2026, I have high expectations for our margin to move into positive territory, to gain higher range. Our tuna branded this year, we want to see a recovery, and the margin in the brand should increase as well.
Last question on the balance sheet management. So we are seeing net D above like your usual comfortable level of around 1.1. So what's your plan? And what level are we expecting in 2026? Thank you.
Yeah, I think you are correct. Our net debt is a bit too high from our point of view at the end of 2025. Again, I think there are some good explanations from that. We made it very clear last year that we wanted to build up some inventories to face with the tariff. You have also inventories in the US which are just inflated by 20+%. Okay, so it's kind of mechanical to have this effect, but clearly I think they are a bit too high. Okay, and we have some action plan across all our regions, all our businesses to decrease our level of inventories. I mentioned also the level of AR receivables is a bit high from my point of view because for a good reason, we had some strong sales in December. So here the idea is to work across all our businesses to gradually decrease the volume of our inventories. That's one of the action plan. Point number 2, I mentioned this one right now at the end of 2025, all the volume coming from India have a tariff rate of 50%, 50. We had a good news from Trump, they are moving down to 19%, so we'll have just a mechanical effect coming from this one. But overall, we are really working very closely with our businesses to see how can we improve that. I think we are a bit too open sometimes to let them increase their weeks of coverage. You have to understand in some part of our business, we have been facing some out of stocks during the year 25. When we are facing this kind of situation, then our commercial people, they tend to increase a bit just to be a bit more safe. Okay, I think here we need to have the right balance. I think we pushed a bit too much sometimes on some inventories. We don't have any concern regarding our inventories. We will sell all of them. It's just a question of cash. Okay, I think in terms of timing, at the end of 25, the situation is not great. For you to remember, after Q3, we are still happy with our cash performance, but clearly in Q4, we have still a reversal in the change. So we are working right now on an action plan to recover. In terms of target, we want to be at the end of 26 close to 1.1. Will it be 110? I don't know, but we want to be much closer to 1.1, which is our comfort zone. And the same in terms of net debt to EBITDA, we want to be more in the range of 4.4, 4.5 times at the end of 26.
I'd like all of you to rest assured we continue to monitor everything very closely, and we want our net debt to equity to lower to 1.1. As you can see in the fourth quarter, especially in December, it was a month that was not usual. Usually in the fourth quarter, our net working capital is low. But in the fourth quarter of last year, it was positive. It increased up to 5 or 6 billion baht, and this was across all categories, whether it was frozen, ambient, or raw materials. And with lower raw materials prices, we purchase those, of course, but in the first half of this year, we will see a decrease in those inventories. And in the past year, another issue is the lowering costs of our repurchase of our shares. This required substantial funds, and this led to the net debt, a higher net debt. But we have adjusted our baseline, and we will bring it back down to about 1.1.
Any question from the hall คะ
Your project, sonar project, has ended. Do you have the opportunity to see a margin at about 11 to 12%? 11 or 12%, I don't think that's possible. One reason is the SG&A is higher than the normal level. As we told you since last year, we have increased our investment in marketing. Our brands, we actually invested less than we should have, which it was less than 3%. We have increased it to 5%. And I believe that 5%, this should be the minimum that should be used. Therefore, our SG&A may not go down to 11 or 12 like in the past. In the past, again, we didn't invest much in that area. If we can manage this at 13.5 to 14.5% or lower than 14, this is something that should be achievable. And don't forget that we have some leftovers from the US tariffs as well in the frozen business. And this has inflated our gross margin, and SG&A is increased.
Okay, now I would like to move on to the Q&As from online, and then we will get back it again. From the first question regarding the transformation cost around 900 million baht in 2025, can you separate between Sona and Tailwind project?
So we don't disclose this information. Obviously, this is a confidential information. As you can expect, there are two different projects, but we don't give the breakdown. Thank you.
The next question is, does the 5.5 to 6 billion capex guidance include in the investment in acquiring space in SM Tower?
Yes, it does. It does. So you may have seen yesterday the announcement about this one. The board approved the purchase of the office that we have in SM Tower, which is our headquarters. It's an investment between 0.6 to 0.7 billion baht, which is factored in the guidance that you can see here.
In the office space purchase, I'd like to ask you to not to worry. This investment is for savings, future savings for each year, because before that we had our rental expenses. In the 11 years, we won't have to have this expense later on.
For the next question, can you update about the outlook of the US and European market?
So I think here we have different situation. I think situation in Europe is not great, to be very frank. Okay, they have been facing a lot of inflation. I'm talking about the macroeconomics first. Okay, they are facing with a lot of inflation, a lot of issues at the political level. I was just in Europe last week, and the atmosphere is not great, and you can see that the consumption is not very high. Also, a lot of tensions. The war is still happening between Russia and Ukraine, and people are under stress, and they don't consume that much. For us, it means it could be good for our business, because you know that sometimes when we are facing this kind of instability, people they will tend to consume more our product or to store more our product. Okay, so it's a watch out for us. As Khun Thiraphong mentioned, we have told you that our branded business has been struggling a bit over the past few years. Okay, and we want to recover some volumes, and this is why we have been pushing over the past few years behind marketing. There was one question on the SG&A. Definitely, we cut too much our marketing in 22-23 when we have been facing with the hyperinflation. We have also a significant bunch of innovation to be launched in the next years. I think in terms of differentiation, we did not do enough over the past few years, and this is why our brand, they have lost a bit of ground compared to the private label. We do believe we have some very interesting NPD to come in the next quarters. We are very excited about this one. So if you combine these two, the additional marketing plus also the NPD, I think definitely we have the right strategy in Europe. US, of course, the situation is highly volatile. I was positively surprised with the resistance of the market during the year 25. Our US business has been doing quite well in the ambient business over the past few years, and is still doing well. Of course, their profitability is a bit impacted by the tariff, but overall it's good. Pet care business, you heard pet care maybe the other day. I think they are doing very well. For them, it's easier. The pricing power in our premium pet food product is higher, so it's easier for them to absorb the tariff. And then finally, in our frozen business in the US, I think we are doing good. And I was very positively surprised also in Q4. Despite the impact of the tariff, our frozen business is still improving. Okay, and we do expect the same to happen in 26.
Okay, for the next question, what's the outlook of the effective tax rate in 2026?
So here, we do expect the effective tax rate to be between 10 to 12%. We have a tendency to be a bit conservative. Very often you will see our actual ETI is a bit lower compared to this one. 26 will be the second year of the top-up tax. I mentioned to you that we do expect the impact to be between 1 or 2%. So when I tell you between 10 or 12%, this is including this additional 1 or 2% coming from the tax. Again, it's a bit difficult to forecast, so a bit of question mark, but yeah, 10 to 12% I think should be a good assumption.
The next question: if Thailand successfully concludes an FTA with the EU, what would the potential impact on TU business?
It's very simple. If that FTA does come to fruition, then Thailand will become very, very competitive because the current import tariffs are up at 24%. I want to change our competitive landscape. Right now, it's Ecuador that has an advantage over us because they don't have to pay any taxes going into Europe. Therefore, producers in Spain, for instance, they are benefiting from this. And when we talk about the FTA with Europe, Spain is very talkative when it comes to this issue. If we successfully close the FTA deal with Europe, then I believe that our competitiveness will help to ramp up our production. If you take a look at the exports to Europe from Thailand, it's still at a very low level, where Europe, as a regional group, it is the largest in the world, even larger than the American equivalent in terms of consumption. So if the FTA does happen, then we will see a resurge. And for canned tuna, for instance, not just our canned tuna, but also our frozen business. Right now, we're paying higher tariffs than other countries like Indonesia. We also have petcar products that we send off to Europe as well. I hope that we will see the FTA before I retire. I've been waiting for that to happen ever since I started working.
Okay,ค่ะ. Now we will invite the participants joining online to ask their question. You can unmute your microphone and ask your question ค่ะ
สวัสดีครับ
1 second, please. Please go ahead. Could you talk about the progress on the deal with Mitsubishi? What's the progress? Actually, the share purchase, we terminated that. I would like to inform you that we have transferred 2 Mitsubishi individuals to Thai Union. One is working in our frozen business. Our intentions are to increase our sushi in America, and the other person is in pet care. Their first priority is to expand the pet care business in Japan. So we have 2 individuals who have joined us, and that shows the great intention of Mitsubishi to continue to work with us.
Back to the question from online ค่ะ คุณนนท์เชิญได้เลยค่ะ
ครับ สวัสดีครับ จะขอถามคุณ
I would like
ลูโด
to
เพิ่ม
ask
นิดนึง
Ludo
นะครับ
a bit more
about the benefit from the Sona project in this year. I'm not sure if I get this right, that there should be 2 pieces. The first one would be the additional cost saving from last year from the project itself. And another piece would be the stoppage of the payment for the consultant firms.
I think here your question is related to the SG&A. I think what we did mention is the transformation cost will decrease next year. Okay, because the tailwind costs will stay at the same. The Sona cost will almost disappear. Okay, and we expect roughly transformation cost to decrease by half. However, we do expect this positive impact to be offset by a negative impact coming from the full year impact of the US tariff in the US in our frozen business. That's why when you saw the guidance provided by Kuntirapong, it's almost a wash. Okay, we keep the guidance quite close compared to what we have been doing in 25. Decrease of our transformation cost, increase of the tariff impact. We want also to increase further our marketing expenses in our P&L, and that's why you see our guidance. We don't see any drastic improvement of our SG&A to sales compared to what we have been doing in 25.
ขอบคุณครับ
Thank you.
Okay, now we will have only one question from the online regarding the 400 million share repurchase in the first half of 2025. Does management still intend to proceed with the planned capital reduction, or is there any possibility of the reselling and treasury share to help reduce debt to equity in line in the range?
At present, we still have plans to reduce our costs. Nothing has changed. We still have 400 million more shares. If we're going to make any changes, we will inform you, of course. But at this moment, there's nothing, no changes in our plans.
Are there further questions from the hall and online? Okay, as there are no further question, and we will include today's session today. Thank you very much for joining us today. We will now take a 10-minute break before TFM session again. Thank you very much ค่ะ ขอบคุณค่ะ